Ladies and gentlemen, thank you and welcome again for this week's edition of Z Real Estate's discussion on real estate. Okay, so first off, we have a lot to discuss. We're going to talk about two issues which I think are pretty relevant to a lot of people out there, and then we'll get into, of course, what you all want to hear about, guilty or not guilty. All right, first off, what's going on in the news? Mortgage giants set to loosen lending guidelines. Now, this affects us all, and this is good news because I think it's an indication of the market recovery. Times are certainly getting better. We've been through some tough times in real estate, particularly in lending. For anybody that's actually tried to get a loan recently, whether it's a refi loan or a purchase loan, I'm sure you've noticed that you've been probed, questioned, interrogated, and cross-examined every possible way, including asking you for death certificates, birth certificates for your mother, sister, brother, anybody that you've ever known. I'm joking, of course, but the point is, it's really tough to get a loan now. Why is it so difficult? Well, naturally, because of what happened in 2007, 8, 9 with the housing meltdown, a lot of people are trying to play the blame game, trying to figure out whose fault it is, what can we do about it, how do we fix this problem? Well, the first step is to write better loans. A lot of the problem stemmed from an issue of wholesale versus retail. Okay, so you have retail loan officers that originate loans. That's what they do. Once they originate the loan, they sell the loan. Who do they sell it to? Well, primarily Fannie and Freddie. Fannie and Freddie are the large mortgage giants. Now, there's a common misconception out there that these companies make loans. They don't. They buy the loans. So how are they so crucial and critical in our housing system? Well, allow me to explain. They allow for the possibility of the endless money supply. Now, how does that work? Let's say you go down to your local mortgage broker and you say, I want a loan to buy a house for $350,000, okay? Now, they will look at Fannie and Freddie guidelines and say, okay, if I can make a loan that conforms to what Fannie says they will buy, and it meets all their guidelines, after I make the loan, guess what? Fannie or Freddie will buy it. Which means if they make a loan for $150,000, $250,000, immediately upon culmination of the deal, Fannie will give them all the money back. Which means how many loans can they do? Answer, unlimited. Providing they meet Fannie and Freddie guidelines, the money supply is unlimited. Now, that's where it gets a little bit more challenging. The reason why it's been a little tighter and more difficult to purchase a house or to get a refinance is because lately Fannie and Freddie are tightening the restrictions. They've been saying, okay, look, you want to buy a house, you want to get a refinance, that's fine. But now your minimum credit score has to be here instead of here. If you've had a foreclosure, you need to wait X number of years instead of what it was before. As far as the FHA flipping rule, in 2010, Fannie and Freddie tried to stimulate the economy by getting rid of the FHA flipping rule. What is this FHA flipping rule? Well, it used to be that you had to wait 90 days, which means that if an investor purchased a house with the intentions of flipping it for a profit, as many people do, there would be a 90-day wait period before that property could then be subsequently resold to a buyer using an FHA loan. Now, in an effort to stimulate the economy, in 2010, the FHFA, which is the Federal Housing Finance Agency, which oversees the FHA, they got rid of the FHA 90-day flip rule to help stimulate the economy. So, as you can imagine, there have been a lot of flips which have been resold top market to FHA buyers. So, yeah, this has been a very good thing. They're getting rid of that, guys. So get ready, folks. December 31st, FHA flipping rule goes back into effect. So they're going to return to the anti-house flipping restrictions after December 31st. Why? Well, it's pretty much served its purpose. Since they got rid of the FHA flipping rule in 2010, FHA estimates that about 102,000 homes have been renovated and resold using the waiver of this rule. The reason for the upcoming termination? The program has done its job. It has stimulated billions of dollars of investment, stabilized home prices, and provided families provided homes for families who were often newcomers to home ownership. Obviously, this is what it's all about, ladies and gentlemen. This is a good thing. Now, why don't they keep it this way forever? Well, the problem is that it opens the door up to corruption, fraud, along with a slew of additional other problems and complications. In the 90s, the FHA witnessed this firsthand when teams of con artists began buying rundown houses, slapped a little paint on the exterior, and then resold them with FHA-backed mortgages. Often to buyers who couldn't even afford the payments and then subsequently defaulted, leaving FHA on the hook to repay. So, considering the fact that the housing has stabilized somewhat, FHA believes it is now in their best interest, along with the interest of our great nation, to return to the anti-flipping rule. So after December 31st, you must wait 90 days before reselling the house to a buyer who wants to get an FHA loan. So, that is what's going on with FHA. And now, on to some good news. Fannie and Freddie are going to release are actually going to loosen the credit guidelines a little bit, making it easier to, once again, purchase a home, to refinance, and to, in general, get a home loan. So that's good news. Now, basically what they're saying is that the reason they tightened it, obviously, is because of a laundry list of fraud, in addition to a host of additional other problems that they had. But, they make warranties to the mortgage company to repay the loan. So the problem is if you get an FHA loan and you don't make the payment, the government pays back your lender. Okay? So that's pretty much how it works on the FHA. And Fannie and Freddie are the ones who purchase conventional conforming home loans on the secondary market. What is the secondary market? You get a home loan from JBQ Mortgage Broker, etc. What are they going to do with that home loan? Well, as mentioned earlier, in all probability, in all likelihood, that loan will be sold to either Fannie Mae or Freddie Mac. And that is called the secondary markets. They purchase those loans on the secondary market and they service the loan. What does service mean? Well, they take care of it. They make sure the borrower meets the contractual guidelines, makes the payments, and services the loan. So that's what's going on as far as Fannie and Freddie are going. They are going to loosen the guidelines, and they're talking about making it a little bit easier, which would obviously open the faucets and make credit much more available to lower and mid-income homeowners and make it a lot easier to afford homes. So that's something that has been in discussion for quite some time, and I'm actually very pleased to see that they're finally inching towards accomplishing that and loosening the credit guidelines a little bit to make it easier for people to, once again, get the American dream and buy a house. So, now on for what everybody's been waiting for. Guilty or not guilty? Okay, we have two of them to discuss this week. First and foremost, the king of foreclosures. Who is he? Where is he? And what is he? Okay, so a Wisconsin man, once known as the king of foreclosures, and his adult son were charged and arrested at their home Monday for fraud and bankruptcy fraud specifically. Todd Brunner, 57, and his son Sean, 24, were arrested in their home in Wisconsin on Monday after marshals kicked down the door. Now, here's what happened. On October 7th, they were scheduled to appear in court, and they didn't show, so a warrant was issued for their arrest. The elder Brunner is accused of hiding about $7 million in assets from various lenders and creditors following a bankruptcy filing in 2011. The bankruptcy case was thrown out of court the following year when a federal judge believed that Brunner had not disclosed all of his assets. Brunner and his son earlier that month were indicted. Todd Brunner set up a shell corporation in his son Sean's name and transferred assets to these entities with the purpose of protecting the assets from being seized in the bankruptcy. That sounds like a great idea. Not really. Anyway, as you can imagine, this is not legal and really doesn't take a lot of digging to figure out what happened. They figured it out. So, essentially, the indictment stated that Todd Brunner was charged with 11 counts of bank fraud and 4 counts of bankruptcy fraud, while Sean was indicted on 3 counts and 3 charges of bank fraud. Now, why is he called the king of foreclosures? Good question. Because Todd Brunner built a very large financial empire on buying hundreds of foreclosures in southeast Wisconsin over a period of many years, earning him the nickname the King of Foreclosures. Now, that's not the only reason he's called the King of Foreclosures. He also weighs 400 pounds. That might have something to do with it. Okay. Verdict. Guilty or not guilty? I say guilty. I say that's unacceptable. My apologies. I say that's unacceptable and constitutes corruption and fraud on a grand level. One more to talk about on our guilty or not guilty segment. Very serious stuff. Okay, so as you know, I am an REO agent. I represent banks and they are my clients. Needless to say, I don't want to talk bad about some or any of my clients. So, fortunately, this one involves a bank I'm not working with, nor, I should add, have I ever really liked. Ocwen. Ocwen is the largest non-bank servicer. What does that mean? Well, as explained earlier, a servicer is someone who services loans. What does service mean? It means take care of the loan, send out the statement, deal with the borrower's questions, field their complaints, talk to them, figure out the impound account, how the escrow payment works, how much went to taxes, etc. They hold the loan, they collect the payments, and they deal with the borrower. For any realtors out there who have ever tried a short sell with Ocwen, fun stuff, huh? Needless to say, they're not the easiest to work with, nor do they particularly have the best grasp on the English language. Gotta love them. Now, New York regulators accuse a lender of sending backdated foreclosure notices. In a letter earlier this week, Benjamin Lasky, superintendent of financial services for New York, said that an investigation of Ocwen's mortgage servicing practices turned up that more than 7,000 letters sent to borrowers had been backdated and sent only after their payment deadlines had passed. Shame, shame, Ocwen. In many cases, borrowers received a letter denying a mortgage loan modification, and the letter that was dated more than 30 days prior to the date that Ocwen mailed the letter. Those borrowers were given 30 days from the date of the denial of the letter to appeal the denial. But the 30 days had already elapsed by the time they had received their backdated letter. Lasky said in the letter, which was addressed to the executives and the board of directors. In other cases, Ocwen systems showed borrowers facing foreclosure received notices to cure their default months after the default deadline had already passed. Gotta love it, right? The existence and pervasiveness of these issues raise critical questions about Ocwen's ability to perform its core function of servicing loans, said Lasky. I agree with him. I've never really thought Ocwen did a good job servicing loans, and I think it should be turned over to someone some entity who can service them far better. Personally, I think NationStar does a very good job servicing loans, but that's neither here nor there. Now, what else happened here? Well, operating in the mortgage servicing space, the company Ocwen, here's what they had to say about it. Ocwen said that the backdating issue stemmed from software errors in correspondence systems. While the company is not certain how many borrowers received backdated letters, it believes that it has now resolved the issue so far. What do you guys think? Guilty or not guilty? Guilty! Shame on you, Ocwen. You guys should know better. That's it for this week, everybody. Thank you very much for joining me. Again, if you need to reach me, I can always be reached on my email, zbanker@aol.com. My cell phone number, 909-559-5275. Johnny Z Banker, at Johnny Z Banker at Twitter, or Z Real Estate Instagram. And again, my website address, if you've forgotten, jonathanzuckerman.com or zrealestate.net. Thank you very much, everybody, and have an excellent week.